Hi guys, it's Stock Curry, and in just a minute, I'm going to give you every single stock pick from the top 10 YouTubers. But first, I want to discuss what the Fed said today and what that means for the future outlook for stocks and the economy in general. So the Fed basically said three things that were important to investors. The first one is that they expect the economy to grow at a very rapid pace over the next few months and throughout the rest of this year. Basically, they expect the economy to grow at a little over 6%. Now, that's really good news because what that means is they're expecting that the pandemic is going to end, things are going to reopen, and things are basically going to get back to normal. That is good news for our growth stocks and our pandemic recovery stocks. The second thing that they said was that they see inflation going up at about 2.2% over the course of this year. Now, they are basing that upon consumer durables. And consumer durables are things like your butter, milk, bread, eggs, things like that. Things that you would typically buy at a grocery store. I mean, it's other things as well, but generally those sorts of things. Now, I really like the fact that the Fed is focusing on consumer durables and they're not looking at true inflation. And what do I mean by that? Well, when inflation occurs, when the Fed prints a ton of money, there's only so much consumer durables you can buy. I mean, you only need one pillow, you only need so much milk, so much bread, so much eggs. There's only so many things that you really need, right? And so typically what happens is consumer durables are the very last thing to inflate in price. What do you end up spending money on when you have a bunch of extra money? Well, you invest in the stock market, you might upgrade your house, you might buy a new house, you might buy some art, maybe buy an iPhone, a laptop, maybe a new car. These are all this discretionary spending and things that are actually going to inflate in price, even if consumer durables only goes up 2%. So what can we expect? Well, very likely we can completely expect housing prices to double. I mean, it makes sense. We can expect the cost of a lot of things that we enjoy that we don't really need to double in price. Perhaps the cost of cars is going to double in price. Cost of eating out at restaurants, fast food, will probably double in price. Your gas will probably double in price. All of these things that are generally considered non-needed, right? That these are the things that are going to double in price. Stock market as well. We may very well see the stock market, well, not every stock, of course, but some stocks are going to double this year. Why? Because a lot of people are getting their stimulus checks. In fact, a lot of people got them today. I got my stimulus check today. And they're going to be using those stimulus checks to invest in the stock market because a lot of people have their jobs, they're doing just fine, and they want to build a great future for themselves and their family. And so they're going to use that money and invest it in the stock market. That is going to create tremendous buying pressure in the stock market starting on Thursday. That is why I strongly believe that Thursday is going to be an update. So I was really, really happy today to see the Fed only focus on the consumer durables when they're looking at inflation. It's a complete lie for the overall economy, but it's good for us because it means that they're not really concerned about inflation right now. Which brings me to the third thing that they said, and that is that they are not going to raise interest rates before 2023. Now, why is that important? Well, in the same way that a stock will report earnings and there's an analyst, average analyst earnings expectations, and then the company may report earnings that are above or below expectations, and that in turn can drive the price up or down. If a company reports earnings that are above expectations, the stock price will most likely go up. If a company reports earnings that are below expectations, the stock price will most likely go down. And the same thing happened today when the Fed spoke about interest rates. The expectations were that the Fed would not raise interest rates until 2023, but there is a great deal of uncertainty there. If the Fed was concerned about inflation, they would have raised interest rates sooner, and that is what I had talked about yesterday. That was a possibility. Now, what the Fed basically came out and said is, we will not raise interest rates for the next 2 years. We will not raise interest rates before 2023, and we don't even have consensus if we're even going to do it that soon. It may be later. Well, the stock market loved that because that means interest rates are going to remain low for at least the next 2 years. That is going to be great, especially for our growth stocks. On the other hand, it's not going to be so great for banking stocks. So just keep that in mind. I think the mortgage rates might come down a little bit since interest rates, now we know they're going to remain low for the next 2 years. So I think what I'm going to do at this point is back off of banking stocks a little bit. I was planning on going pretty heavily, but now I think I'm going to back off a little bit, and I'm going to stay focused on the growth stocks because I know for at least the next 2 years, they're going to have access to really cheap money. So that's an update on what the Fed said today. Let's go ahead and get into today's stock picks. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day, and you will get every single stock pick from the top 10 YouTubers. And all I ask in return is that you hit that like button, subscribe, and click the bell icon so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. I just want to remind everyone that I am not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. Alright, let's get into today's stock picks. First up is AAL. This is American Airlines, and Chris Saint likes this best as a pandemic recovery play. Next up is AMC. This is AMC Movie Theaters. Smart Trader went over what's next for AMC now that it hit its price targets. Now, Smart Trader mentioned the stocks that were awarded to the directors and chief officers today as the reason for today's price action. He saw this as insider buying, which it is, but this is normal activity when a company gives stocks as part of a compensation package. This is not insider buying due to an insider feeling strongly about the company. This is the company buying and giving to chief officers and directors as normal annual bonuses. So this is not a sign of confidence from insiders. You can't read into it like that. This is what's known as an uninformative buy. Uninformative transactions indicate that an insider is buying or selling shares for reasons that do not necessarily indicate confidence in the company. Informative buy and sell transactions, on the other hand, are deliberate moves made by insiders, thus donning a vote of confidence in the company. But in this case, these were uninformative buys, which are meaningless when trying to determine if insiders have confidence in the company. Now, technically, this chart is far more consistent than the run-up that we had back in January. That means that this bull run is also much stronger. The next levels of resistance are at $16.50 and then $20. Next up is BGS. This is BNG Foods. This is a dividend stock, and Chris Saint owns BGS in his long-term dividend portfolio. The dividend yield as of Wednesday's close is at 5.9%. Next up is BNGO. This is Bionanogenomics, and Keenan Gray said BNGO is still in a buy zone, but did stress that he has an ideal buy-in price of under $8. He also let us know that BNGO is presenting at a conference now through the end of this week, so there may be some catalysts that come out of that conference. Next up is CAN. Smart Trader likes to play CAN for short-term Bitcoin plays. He said that if it breaks above $34, it will rally to $40. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. Stockmo said that he is feeling good about CCIV rebounding off of lows and getting back above $30. Next up is CSWC. This is Capital Southwest, and this is one of Chris Saint's favorite dividend stocks. Chris Saint owns CSWC in his long-term dividend portfolio. CSWC has a dividend yield of 7.67% as of Wednesday's close. Next up is CTRM. This is Castro Maritime, and they are a commercial shipping company. Keenan Grace reminded us that CTRM remains in a buy zone. Keenan Grace gave a buy-in price of $1 and an ideal buy-in price of 80 cents, which is at the 50-day EMA. CTRM remains under my buy-in price of $1.15 and is right at my ideal buy-in price of $1. I will also let you know that I own CTRM. Next up is DIS. This is Disney, and Smart Trader let us know that DIS is reopening parks at the end of this month. Their Disney Plus streaming service continues to grow as well, so there is a lot of potential for DIS to continue growing. This is a great long-term growth stock. Next up is DKNG. This is DraftKings, and they're an online sports betting company. StockMo says DKNG will continue going higher because they are expanding around the world. Next up is EBON. Smart Trader likes EBON as his favorite short-term Bitcoin play because it moves the most out of all of the Bitcoin stocks when Bitcoin rises. Smart Trader said that if EBON breaks $13.50, it will rise to $15. Next up is MAIN. This is Main Street Capital. Christine reminded us that with dividend stocks, you can buy these at any price. You do not need to wait for a dip to buy dividend stocks. Christine owns MAIN in his long-term dividend portfolio. I will also let you know that MAIN had a 6.33% dividend yield as of Wednesday's closing price. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo reiterated that he thinks NIO has the highest upside potential of all of the EV stocks. He also reiterated his $75 to $90 a year in price target. In the short term, Smart Trader said that if NIO can get above $46.50, it will quickly rise to $50. Next up is NNDM. This is Nano Dimension, and they're a 3D computer chip printer manufacturer. Keen and Grace let us know that NNDM just announced that their first ever 3D printed circuit board has been sent to the International Space Station. This will probably just be the start of many uses of NNDM's chips in the space industry. Now, StockMo sold NNDM when he was down, and even though he likes NNDM, he is still waiting for 31 days after he sold so that he does not get a wash sale. Now, this is just a personal preference on investing styles, but I personally don't pay any attention to wash sales. I don't think you should give up $1,000 in gains to save $300 in taxes. In any given year, wash sales make up less than 5% of my trades, so personally they're just not important enough to worry about. I'd rather focus on maximizing my profits, and if I have to pay a few extra dollars in taxes, that's fine. I got stopped out of NNDM at the 21-day, 50-day, and 100-day EMAs. If I had stopped there and not rebought because I wanted to avoid a wash sale, I would have missed out on a 60% gain. And yes, I might pay an extra 5% in taxes on my gains due to the wash sale, but who cares? I'm up 60%. So personally, and this is just me, I don't want to miss out on 60% gains trying to avoid an extra 5% in taxes. Now, if you're not currently in NNDM, Keenan Gray said this is still in a buy zone, although he did give an ideal buy-in price of $9, which would be at around the 100-day EMA. Next up is OCG. This company is involved in non-fungible tokens or digital art linked to the blockchain. Smart Trader is waiting for a 50% pullback on OCG, and then he says it will be at a good buy-in price. From there, Smart Trader thinks OCG will double again at some point. Next up is OLO. This is Olo, and they develop digital ordering software for restaurants. That Inside let us know that over half of the public restaurant brands are using OLO for online ordering. That includes over 64,000 restaurants such as Cold Stone Creamery, Denny's, Five Guys, Subway, Which Wich, Shake Shack, and many more. This company's growth has been exponential. Now, that might be expected given the pandemic and the shift to restaurant delivery, but what's important to understand is that OLO was growing exponentially for years before the pandemic started. And that is why Dead Inside thinks OLO will continue to grow even after the shutdown ends. Now, this company IPO'd today, so at this point you should only consider buying OLO if this will be a long-term hold for you. If you want to buy OLO, I would recommend dollar cost averaging in over the next 3 weeks. Next up is PLUG. This is Plug Power, and they're a hydrogen fuel cell manufacturer. ZipTrader let us know that PLUG was down today because they announced that they made a mistake when they reported earnings. They basically forgot some line items when they were doing their accounting, so they'll need to file amended financial documents. Now, a lot of analysts are saying that this is a great dip buying opportunity, but ZipTrader said he would rather wait for the dust to settle before buying. I, on the other hand, did buy an April 16th $45 call option on PLUG this morning when PLUG was trading at around $36.30. PLUG stated that this was a simple accounting error and that nothing has changed with their business or growth outlook. So that gave me confidence to buy. Next up is SAVA. Smart Trader is waiting for SAVA to break $66. He said once it does, it has room to run to $117. This is a very volatile stock, and Smart Trader is waiting for this to break $66 so that he can buy a call option on it. Smart Trader will be day trading this stock. Next up is SNDL. This is Sundial Growers, and they're an MMJ stock. Smart Trader let us know that SNDL had positive earnings and it was up 9% after hours. He is looking for SNDL to go up to around $2 shortly. Next up is T. This is AT&T, and T is one of Chris Sain's favorite dividend stocks. Chris Sain owns T in his long-term dividends portfolio. T had a dividend yield of 6.9% as of Wednesday's close. Next up is TKAT. This company is involved in non-fungible tokens or digital art linked to the blockchain. ZipTrader is waiting for a 50% pullback on TKAT, and then he says it will be at a good buy-in price. From there, ZipTrader thinks TKAT will double again at some point. Now, if you want to understand more about what an NFT is, please go watch ZipTrader's video that he uploaded Wednesday night. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. StockMo thinks TSLA will remain the clear leader in EVs for a while. That is because of Tesla's advanced technology and experience. StockMo also let us know about a Morgan Stanley analyst who reiterated his $880 price target on TSLA. In the short term, Smart Trader said that once TSLA breaks above $720, it will very quickly get to $750. Next up is VUZI. This is VUZI, and they're an augmented reality company that already has a lot of customers. Smart Trader said that if VUZI breaks $22.80, that is a signal that VUZI will go up further. This is a short-term day trade for Smart Trader. Next up is VWAGY. This is Volkswagen, or as I say, Volkswagen. Keenan Grace let us know that VWAGY was up 29% today because they just sold more EVs in Q4 of 2020 than Tesla did. Volkswagen is quickly rising to become the #1 EV manufacturer in the world, and analysts think they will completely overtake Tesla by next year. They plan to have 70% of their total car sales in Europe and 50% of their total car sales in China and the United States be EVs by 2030. Now keep in mind that this is just EV sales. Keenan Grace reminded us that where Tesla really shines is in their autonomous driving technology and their batteries. But that might not last, because VWAGY plans to start making their own batteries going forward. Keenan Grace likes VWAGY at its current price, but did give an ideal buy-in price at $37. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up, they're going to give you 2 free stocks worth up to $1,850 when you deposit just $100. In addition, they're going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.